Good evening, everyone. So let us start the whole content of the cryptocurrency trading internship. My name is Paras Goel. This internship is being hosted by the Novel Asset. I know that there are so many, expectations that you have come with this, that you will be learning a lot. And I'm telling you that by the end of this internship, you will be learning a lot of things, what we do in intraday trading. So specifically, we will try to concentrate our, concepts based on intraday. We will be discussing a lot of concepts based on the fundamentals and the technicals. So this is a small disclaimer. Please go through it once. So this is about me. I'm a gold trader basically. My name is Paras Goel. I'm a startup consultant and also the co-founder of the Novel Asset. I'm an intraday trader specializing in the crypto investments, including the semi-automated trading. So basically, we do try to amalgamate the concepts of the say automated trading or the algorithm-based trading and the discretionary-based trading as well. So the basic difference between the two is that when you try to take trades based on your own analysis, okay, based on human conception, that means we are doing some discretionary trading. That means we are trying to analyze the market with our own eyes, and we are trying to analyze the things with our brain, and then taking the decisions whether to buy or sell. In the other part where we talk about the algorithm trading. So what happens in the algorithm trading is basically you establish a simple strategy. Okay, so let's say you develop a plan, you develop a strategy, and you know that strategy is very much fruitful. Now you code that same strategy into the computer, whereby the computer itself analyzes that market on a daily basis, analyzes the data, and then take the trading decisions based on the same. So amalgamation of both is basically a semi-automated trading where you use some algorithms based on some simple concepts, and also with the algo you also use some discretionary trading as well, whereby you yourself take some decisions whether to buy or short. I specialize in gold and bank nifty intraday trading, and also the with the coming verge of the intraday concepts of the cryptocurrency. So these are the qualifications, and I am also an ISM certified research analyst. So about this internship, I know that you have so many questions about this internship. So let me tell you a little bit, an overview how this internship is going to go. So this is totally a 15-day internship, which will be having two verticals. First, we will be having some live classes from about 6 to 7 days in these 15 days internship on an alternate day basis, where you will be taught around the technicals, fundamentals, the risk management principles, and the trading psychology required in the cryptocurrency trading. On the alternate day, on the next day when you have the concept, you will have a task day. So I'll be providing you with some homework so that you can better do your concepts. Okay, whatever you learn from here, you try to establish those concepts in the practical market. So we'll be giving you some assignments, and on the next day of the class you will have to do some assignments on the regular basis. Post internship, okay, once you complete this whole internship of the 15 days program, post internship, you will, after completing all the classes and the assignments, you will be given the internship certificates. So please note down, people, if you're not if you will not be doing the assignments, you will be having a lack in some understanding, or you might have some lack in your learning as well. So basically, if you are complete with your assignments and then you have a regular attendance in the class, only then we will be providing the certificates. Also, if you may perform well, let's say you take the internship very sincerely and you practice all the concepts that I have taught you, then you can also apply for a trading job with us. Okay, we also provide trading, trading jobs on our panel. So we have around 15 to 20 traders on our panel. We also help people in the funding problem. Okay, so let's say you are a trader, you have a skill better than anyone else. You are making a good, risk reward ratio in the market. You have some particular edge in the market, and you have belief yourself that yes, you can do well in trading. Then also we help the traders in getting the big funding, which they are not able to afford by themselves. So the question is why this internship is for you. This internship contains a whole exposure of the crypto market. So we will be having a lot of understanding of the crypto markets. What are the fundamentals? What are what is Bitcoin? What are the altcoins? What are ICOs? How do we actually invest in Bitcoin, and how we actually intraday trade in the Bitcoin as well, or the cryptos. So as a beginner, when you face difficulty in understanding the functioning of the crypto market and then gets confused where to start from, this internship for you. So let's say you have a very good, you have a very keen exposure, you have a very keen interest in the cryptocurrency market, as you know that how the market has boomed from zero to thousands and hundred thousands of dollars. Even in so many crypto investors are still optimistic about the Bitcoin rate that it will reach around $100,000. So we will be discussing, let's say, if we will be looking at the charts, okay, we will be going through a lot of charts in the crypto markets, reading the technicals, knowing the fundamentals, how to properly analyze the crypto charts, and how can we actually make a decision decision that yes, this is the point where we should, actually invest in the game, or we should not investigate. So this is all the analysis that you will be learning by yourself. Okay, it's not upon like I'll be giving you some analysis. It's by the end of this internship, you will be the one telling me, so when whether you should whether you should be right in right now buying, or you'll be right in selling. So try to understand the concepts very deeply. I'm a very you can say open-minded trader, and we do have a lot of basic knowledge chunk which you can see on our YouTube channel as well. We have done with the bank nifty internship. We are also done with the forex internship, where we have shared a huge knowledge. So even if you want to take knowledge from the other markets as well, you can just go on the YouTube channel, and it's all free of cost for all of you. So not only we will cover the basic understanding, but you will also find the huge knowledge chunk in this practical concepts. So not just like theoretical things we will be covering up, we will be having a live understanding of the market. We will be doing the concepts practically. Okay, I will show you my screen. I'll share my screen on the charts. How do I analyze on an intraday basis? How do I take decisions whether to buy or whether to sell? Where to put up the stop loss? Where to put up the targets? How much trade you should take? How many trades you should take in a particular day? Or what is the risk management that you should follow while actually trading? So we will be going through all of the concepts, and also by the end of the class, we'll be performing a live trade in front of the class, so that you can understand how can we put in the orders in the market, and you will be able to understand by yourself. So we will be discussing a whole lot of knowledge in the markets. How do we throw trades? How do we actually risk manage? And lots of stuff we will be talking about. We will be talking about, even if you want to invest, how can you make your money tenfold or hundredfold? Okay, how to catch that opportunity. See, I'm not going to sell you an overselling opportunity. There is nothing going to be if I'm taking free classes over here, there's something I'll be selling to you afterwards. No, there is nothing going to be like this. Okay, I'm just trying to gain you my knowledge, what I have gained all over the market, my whole experience, and I'll be sharing my experience and knowledge with you. So if you understand, and if you believe that this knowledge or understanding can help you in making some profits, do apply the same in the markets. But if you think that no, it is not for me, or you have some doubts on the things that we are understanding here, you can leave it. Okay, you do not have to follow just me, but at least you will get a kickstart where to start from. You can start from here on a daily basis. You can learn with me. You can practically apply the concepts in the market as well, and then we will also be moving towards a live trade. Okay, I hope so everyone is excited about this internship. Please tell me yes or no, and if you have any questions still yet, please let me know as well. That's great. Even if you're looking for jobs in investment banking sector, yes, the investment banking sector is not just limited to now with companies and stuff. There are so many crypto banks that are being developing. There are so many crypto developments, that are happening on a regular basis. So you can apply for the jobs in the crypto markets as well. You can have this internship in your CV for the same. Not just CVs. You're not doing this just for for your CV or for your certificate. You will also be discussed a lot of knowledge in the crypto markets. Okay, whatever is happening live in the crypto markets, how to read those things in the market, and actually how we'll be able to make some profits on a regular basis. Okay, so we will be discussing everything like which platforms are we going to use for crypto trading. See, that there are so many limitations on the cryptocurrency because of the you can say the government policies and some stuff. So we'll be discussing about the tax implications as well, like how the tax implication has changed in the nearer scenario. So we'll be going through a whole knowledge of chart. Okay, so let's try to assume that you are a newbie. Okay, I'm also a new person over here. We are just communicating with each other. Okay, do not try to focus a lot on the things that you are just a student over here. Try to focus that you are a professional now. Okay, you are an intern in the financial markets. This is one of the financial markets that we are going to cover. Okay, so even if you have lost some money, like people are saying that they have lost money due to lack of knowledge, then I will say that this thing is for you. Just understand the concepts first before investing in any investing your hard-earned money into anything. Let's say forex or crypto or stocks. It's not important which investment you are actually choosing. It's very important to have a specific knowledge about the specific market. So many, I have seen so many traders who were into stock market, and then they're trying so hard to, realize those same profits in the crypto market. And they have lost a lot of capital because they were trying the same knowledge, okay, which was in the which they have learned, or they were practicing in the stock market. They were trying to use the same knowledge in the crypto markets as well. But I'm telling you, crypto markets are very much, you can say, volatile. than any other markets. So there is a saying that if you are dealing in crypto for 2 years, it will be counted as 20 years of your experience in stock markets. Okay, so we will be, leading. You will be when we will be leading with this internship program, we will be studying a lot of things about the nature of the price. We will be having, great sessions about the fundamentals, how the protocols are made, what is Bitcoin mining. Okay, we'll be covering the concepts of all the fundamentals that we can cover, but mostly we'll be trying to have a basic and advanced concepts of the technical knowledge, because only of the technical analysis knowledge we'll be discussing, like what is the difference between the fundamental and technical, and what is used when, right? So our main focus will be majorly on technical knowledge, which will be including the knowledge of the price action. Okay, we will be discussing a lot of price action strategies as well, so as to know how you can actually make yourself money and pay yourself every day. Okay, so please take this opportunity sincerely. You'll be learning a lot. Okay, you will be earning a lot, and I hope that because of this internship, if you are able to add any concept or practical thing in your knowledge, or your knowledge bank, it will be a very much advantage for me. Okay, so please try to take these sessions sincerely. Even if you have any questions, just let me know on the spot. I will try to answer maximum of your, the things that issues that comes up in your mind. Because if you're not able to understand one thing, then you will not be able to understand another thing. So it's a cycle. Okay, so if you have a question in the same basic thing which we are discussing right now, you can ask your question. And if I'm not answering, please do not rewrite the question, because understand, when I'll be going through with the advanced concepts, you will be able to answer, your question will be answered in the next concept. So will this be a new source of income for me? Yes, you will have that opportunity to open a new income source for yourself. Even if you want to do, this business as your side trading, okay, as a side business along with your job, or your, let's say, or your job or business, then it's a very much great opportunity. Many of the students from the Forex internship have started earning themselves. Okay, many of them are few even present over here, those who are earning as, on a regular basis as well. So it's all about the practice that you need, but before practice, you need to have the, knowledge of that thing, contents of this internship. Okay, so I know that you have, many of you have a lot of questions about what are we going to cover in this internship. Okay, what are the contents of the internship that we're going to cover up? So I can show you, this is the list that we are going to cover up in this whole internship. We are going to go with the basics of financial markets. We will not just look into the crypto markets first to understand. We will have an understanding of the basic of the financial markets, how the financial markets are working, because this is like a Venn diagram. Okay, this is like a Venn diagram. Who have studied maths like 12, they know about the Venn diagram. So it is one of the biggest circle. Financial markets is the biggest circle, and the other crypto markets and the forex markets comes in that big circle. So we will be going through the basics of the financial market. Then we will be moving on to the crypto markets and in terminology. Okay, there are some specific technical jargons that we use in a regular life. So you should be aware of the same, so that you can able to know, like if I'm saying that we are going long on this position, you should know that what is meant by long or what is meant by short. Okay, so we will be going a little bit about the terminology. Then we will be moving on to the fundamental analysis. How do we do a fundamental analysis in the crypto markets? Okay, so we will be learning a lot, about some websites, about some news analysis. See, fundamental analysis is something basically which you will say it is outside the source of the Bitcoin. Let's say if any news, let's say any government policy is affecting the price of the Bitcoin, then it is covered under the fundamental analysis. Okay, these concepts which we will be covering in detail in the future, but right now understand that we are going to go through a whole of the journey. We are not even going to leave a single point of how you will not be able to understand how the crypto markets is working. So along with the fundamental analysis, then we will be going to the crypto trading strategies. Okay, we will be going through the technical analysis. We will be, studying about the positive risk reward ratios, how you can maintain a, positive winning ratio. Your winning ratio, that means if you're taking 100 trades or 100 investments, your winning ratio should be more than 50%. Your winning trade should be more than 50%. Only then you will be able to survive in the market. Then we will move on to the live trade examples. Sometimes I'll also show you my live trades as well, and I'll try to maximize, try to show you a live trade in front of you. After that, we will be moving on to the very much important principles such as risk management, money management, and the trading psychology. So these concepts will be majorly covered by our performance coach in our platform, Zarwana Kapoor, who is a trading psychologist in the market. Okay, so try to understand that this is a very good opportunity for you people. We as a Noble Asset are handling a huge database of the clients, and we are also empaneling some many traders on our platform. Okay, we also have some international students enrolled with us. They are also doing this stuff and doing the trading on a regular basis. Okay, and I have been a trader I have gained a lot of experience as a trader and a trainer along with, right? So try to regard that experience, try to imbibe that experience into yourself. So the 3 C's of the trading or investment are: first is consistency. Whatever you are doing, okay, if you're not consistent with it, okay, if you're not let's say you get a you get an ambition, let's try crypto markets, and you just started with the day one, but after day two or day three you just vanish, okay, out of that market. So it will give you a loss. That is why one of the first principles of the trading is consistency. Second is your conviction. Okay, conviction and the confidence of the 2 C's of the market, that will go hand in hand. Okay, your knowledge about the crypto markets will actually increase these two. Your practical experience about the crypto markets will increase these two. Okay, the more and more knowledge you will gain on a regular basis, the more and more experience you will gain by looking at the charts, by looking at the price levels, how the price is working, by using the principle of the price action, which we'll be covering in this section, okay, in this internship. The rest 2 C's will be covered by that. But first C, that is consistency. It is always about your commitment. So if you are sincere enough and you really want to make profits out of the cryptocurrency, see, you may have met some friends or family friends who have actually made a fortune in crypto markets because they were early buyers in the crypto. Okay, and you might have listened to their stories, how they have made 10 times or 100 times of their money by investing just thousands of bucks. I'm not even talking about that you have to invest a lot of money in the crypto market. You can just start investing by 1,000 rupees as well. But how to start that investment? My major question is not how much amount I can afford to I can afford, but the major thing is that how I could start investing in the crypto markets. So let's go to the first major question: what is financial markets? Right? What is financial markets? How do we deal in the financial markets? What is our job as a when we are a participant of the financial market, when we are trying to enter into the financial market, we are a participant of that financial market. So it is very important for you to know what is your role in the financial markets. So any market, okay, any market, if you talk about, like, let's say even vegetable market or fruit market, or let's say stationery market, or any market that you are going to deal in, it's a common place where the buyers and sellers come together to trade the financial assets. So in a financial market, basically the buyers and sellers, okay, the buyers who want to like, let's say you want to buy some Bitcoin. Okay, you want to buy some Ethereum for investment. Okay, for every buyer, there should be some seller. So if I'm asking you that if you want to buy some Ethereum or you want to buy some Bitcoin or any financial instrument in the market, there should be some seller who's selling that thing, right? So when at a common place, let's say you have heard about a lot of crypto platforms, let's say WazirX. So WazirX is what? Basically a common place where the buyers and sellers of the crypto market are coming together and doing the trade. So basically what are they doing? The buyer is giving the seller money, against which the seller is giving some cryptocurrency, against which, can you understand the normal transaction, how it is going? So let's say you have some money, you want to buy some Bitcoin, let's say even 1,000 rupees or $100, whatever the amount you have, there should be some specific seller who can give you the same quantity which you're asking for, right? Let's say you're asking for 0.01 Bitcoin. Okay, I want to buy some 0.01 Bitcoin. There should be some seller of 0.01 Bitcoin as well. Okay, let's say you are a buyer and you want to buy some 100 Bitcoins. You have the capital. You want to have 100 Bitcoins. Is it easy right now to actually trade so much or buy so much quantity of the Bitcoin right now? No, there will be less sellers. So you will have to do what? You will have to come up with the patience with the sellers, so that sellers of the same quantity should be there, in the market, so you can buy that thing. So if you want to buy some Bitcoin, you need to find who? The seller of the Bitcoin. Okay, so it's just like a normal market where the seller gives the price quotation. Obviously, the seller is a demanding. Okay, if I have something, let's say we are taking this course and you comes to me, so I want to buy this course, or I want to buy some Bitcoin from you. What will be I doing? Okay, if I'm a seller, what is my first thing that I'll say to you? It is the price quotation, right? I'll be giving some price quotation, and basis on what you will decide whether you want to buy that Bitcoin on the same price or not. So let's say you came to me, you said to me that you want to buy 0.01 BTC, and I'm saying that I'll charge 16,000 rupees, or let's say $200 for it. Okay, now the decision comes upon back to the buyer whether he really wants to buy the same thing at the given price. Okay, so we will be talking a lot of this thing, in detail, how the things market work, how the prices actually meet themselves, what is the ask price, what is the bid price, and then we will be going on with the job. So like in any market, there are various products based on the needs and preferences. So the financial markets growth includes a lot of products. Okay, so like have you seen in the vegetable or any food market that there are so many qualities, there are so many varieties that you can choose from, right? Similarly, the financial markets are full of varieties. Every buyer of a financial instrument has its own recommendation. Like everyone has its own taste in food industry. Like someone really likes spicy food, someone doesn't like spicy food. Similarly, in the financial market, there are investors who are more risk taking people. You love risk. Some people are very risk aversion people. Okay, they do not want to take much risk, but they still want to earn some profits. So there are so many financial market products that are available to the buyers and sellers based on their needs and preferences. So let's say equity. Okay, one of the most important product is equity. When you deal in the cash market, where you buy shares of some particular company. Let's say you want to you want to buy some investment, so you buy some shares of Reliance company. So that is what, that is equity. Similarly, there is a forex market, forex currency market basically. So what is it doing over here? You know that you might have read this news that in the recent days the price of the dollars has increased a lot. Are you updated with the news that the price of the price of the dollar against the rupee has moved a lot? Yes. So let's say you knew it already. You knew it already 3 months or 4 months back. Let's say you knew it already 3 or 4 months back. So what do you wanted to do then? You wanted to buy some dollars? Yes or no? Right? So because of that demand, you become what? You become a buyer. Similarly, people, deal in for commodity as well. So crude and metals, like if you know that the price of the crude oil, let's say petrol or diesel is going to increase in the coming future. What are you going to do now? You are going to buy it, right? And if you know that the price of the commodities going to go down in the coming months, so what are you going to do? You're going to sell that crude oil something, right? So this is how there are so many products in the market which you can actually buy or sell in the long term or in the short term based on your own analysis. So similar is a financial product known as a cryptocurrency. So what are cryptocurrencies? What you might have an idea a lot about the previous things, but there is a lot of question that comes around what actually is cryptocurrency. So which we'll be going to cover in detail. Okay, why they are called cryptocurrencies? Why they are not crypto commodities? Okay, why it is not considered as a commodity? Why is it considered as a currency? So we'll be dealing with a lot of differences. So just open up your eyes and ears and just try to listen and try to imbibe this knowledge with. Okay. So going on the next slide is the first difference between the trading and investing. So once you understand, once you understand the normal concepts of the financial market, first thing you need to understand the difference between a trading and investing. Okay, many people try to think that there are very different terms. No, they are not very different terms. The whole motto is same, right? When you're trading in the market or when you're investing in the market, everyone enters in the financial market for profit, yes or no, right? So everybody wants to make some profits out of the financial markets. So anybody who wants to make profit, the major funda or the minimal fundamental that they have to use is what? They have to buy low and sell high. So let's say I'm buying something at 100 rupees and I'm selling at 103 or 110 rupees. Did I make a profit? Yes, right? So the whole motto of the trading and investing is same, okay, or is similar. The only difference comes with the time. In trading, when you are doing for a short period of time, you are buying something to sell tomorrow or day after tomorrow or within 1 month. That means you are going to trade it. You are not buying it for investment purposes. You are not buying to own that thing. You're just looking for the price speculation. You're looking for the price to increase, so that whenever the price will increase, I will sell it, right? So it is known as a term with the trading. But when you are investing, okay, investment is for longer period of time. Obviously the motto remains the same, that you want to enjoy the profits out of the capital gains. But in investments, you are doing for the longer period of time, let's say 6 months or 2 years. Okay, so understand, like if you buy Bitcoin today and sell tomorrow, what is it? If you buy a Bitcoin today, you're selling tomorrow. Is it trading or is it investing? Try to answer this, people. If you are buying, if you're buying Bitcoin today and you're selling it tomorrow, okay, then what is it? It is trading. But the people who have bought the Bitcoin or any cryptocurrency in the year 2016 or in the year 2017, were they traders or were they investors? Those who have hold for around 2 to 3 years or 4 years or 5 years, they were the major investors. And the potential of the profit with the investors is much huge than what has been in the trading, right? So the ROI, the risk, the risk appetite that you are looking, or the return appetite that you're looking in the investment is very, very huge in trading. So irrespective of your time frame, there is a certain need of analysis of the security. So let's say whether you are, entering into the market for short term or for the long term, the first and foremost thing is you should know in advance whether the price will increase or not. If there is a commodity whose price is going to decrease in the future, will I buy it? If there is any currency which is going to decrease the price in the future, will I buy it? No. So you do understand the basic difference. The price is going to go decrease, I'm not buying it. But if the price is going to go increase in the coming future, then I'm going to buy it, right? So coming to this conclusion, whether the price is going above, upside or downside, how do you get to know that? You are getting to, know this in advance by doing your analysis. So irrespective of your time frame, whether you're investing or you're trading, there is a certain need of analysis of the securities. Based on what you will take some decisions. So you are the one who are taking this decision of buying or selling. Let's say the people who have already lost their money in the crypto, what were they expecting when anyone buy that share or a commodity or a currency? What is the buyer expecting? That the price will go upside? Yes. Whenever you're buying, whenever any buyers buying something, what is his expectation? That the worth or the value of that same thing will increase in the future. But does it happen every time? Whenever you are buying and the price is increasing, does it happen every time? Tell me yes or no. Let's say you have an expectation, you have done your analysis, and you're buying because you are expecting that the price will increase. But is it certain that the price will actually increase in the future? No, it is not, right? And that is why there is so much competition. There is so much competition among the buyers and sellers, because the buyer, the basic the basic funda of the buyer, the basic expectation of the buyer is that the price is going to go high in the future, right? But the person who's selling to that buyer, tell me, what is his expectation in the market? Will the price will increase or will decrease in the future? So the seller who is actually selling that currency to the buyer, what is his expectation? Will the price increase or decrease in the coming future? Decrease, right? And that is why there is a constant, you can say there is a constant quarrel between these two, the buyers and the seller. The major fight is not with the, between the buyers and sellers. It's because of the expectation of the buyers and sellers. So if you're trying to take profit in the market, if you're trying to have a regular profit in the market, just understand one principle, that what you need to do is to not follow your expectation, follow the analysis. Your analysis have a higher probability of becoming right in the future than your own expectations. Am I right? Your analysis has a higher probability. If you have a certain amount of knowledge, you are equipped with the concepts of price action, the probability of the analysis is higher than the situation happening outside of your expectancy. So the basic thing that you have to learn with me in this thing is to control your expectations and try to analyze more. Because when you are analyzing more, then only you are able to concentrate your focus on the analysis rather than expectation. And this is one of the major thing that you have to understand under the trading psychology or the investment psychology, that you have to push your expectations to some downside. You have to hire the priority or the place of analysis in your mind. You should be more analytical than expecting buyer or seller. So one of the concepts is active versus passive investment. So even if your investment, okay, so this is a very small concept, just an additional one, so that you understand that the major difference between the active and the passive investment. So very small difference is when you are investing your money, okay, let's say you bought some bitcoins for a longer period of time, that means you're doing investment, right? So if you're taking a decision by yourself, if you're doing your own analysis, you're doing your own homework, and then you're deciding that you want to go buy, you're putting up your money to invest in the crypto market, that is known as active investment, because this is done by your own activeness in the market. So understand this concept, that the difference between the active and the passive investment is when you're doing your own analysis, you are taking a decision based on your own analysis, you're doing your own homework, okay, and then you are investing your money in some cryptocurrency or even any commodity or forex market or equity. That is known as active investment, right? So this is a basically inclusion of your own activeness in the cryptocurrency market. But a passive investment is basically another, another method of investment. Let's say you are a businessman or you already have a job, you do not have much time, or let's say do not have the enough knowledge which you really think that can help you with gaining, positive edge in the market. Then you are doing what? Then there is another source or another method of investing in the markets known as a passive investment. That means you are investing your money, you are putting up an investment, let's say $10,000 or $100,000, you are putting up your money for investment in the crypto markets, but that investment is actually done by some other learned person or a knowledgeable person. That means you are giving your money to some other XYZ person to let them handle your investments, because according to your own view, he's much more knowledgeable, or he's into that thing only, he has much more time than you to actually do this, homework and analyze itself. And this is known as a passive investment. I hope that you are, clear with this, both the types of investment. If you have any question about what is active investment or what is passive investment till yet. So in a nutshell, I can say that the active investment is the investment that you are doing in on your own basis, okay, on your own analysis. But when you're doing a passive investment, you are giving your money to some other person, okay, to a fund management company, and then asking that person or the company to manage the funds, based upon your expectations or based upon, on your behalf. So that is known as a passive investment. Okay, so what do you think? What do you think has a more edge in the game? Who do you think will, make more returns in the market? Active investment or passive investment? So majority of you are very much clear that it is the active investment, because it is because of some principle known as the prudence principle. Okay, what do anyone know what is known as what is the meaning of the prudence principle? Please write in the comment box. Let's understand the prudence principle is basically that if you're giving someone else your money to invest in the market, do you really think that he will take care? He will take the same amount of care that you will be taking if it's your money. So the amount of care that you are taking for your money, do you expect that another person will take care, will take the same amount of care for that money or for that investment? No, right? There will always be some human deficiency in that thing, because it is not your money. There is a massive possibility that he or she may not be able to, make a positive return and may make some losses as well, because they're not going to take same amount of care of your money that you are going to take of your own money. So it is all about the amount of care, amount of things that you're analyzing. Okay, when you're investing, let's say $1,000 or 80,000 rupees in the market. Okay, so let's say you're investing 80,000 rupees in the market. Will you not be much more careful? Will you not be analyzing more and more, so that you can actually, be confident that yes, it is your trade, or this is the opportunity that you should invest your money in, right? But the passive investment has a standard flow. They will have their own analysis, they will have a limited type of analysis, they will not go some extra efforts, may or may not, right? There are some investment firms that are very good in the market, but not every firm, is doing the same thing, are playing the same cards. And those firms that are actually generating returns because of the atmosphere, they are something which you cannot afford, which me and people like you cannot afford, because they are charging so much huge fees, right? So more and more focus you should do is your own active investment. When you're active in the market, you are much more updated about the market. You are much more, you are using your capability skills. You are taking that utmost care of your own money, which you cannot expect from other person to take. And that is why, because of this prudence principle, you should always opt for active investment. But because of some, let's say, lack of time or knowledge, you are not able to do so. Do not hesitate to go yourself with the passive investment method as well. So I'm not saying a total no to the passive investment. I'm just saying that please take care of your, whenever you're giving your money to someone else, or you are giving your account to, be handled by some other trader, please be very much sure that that investment will be, taken care of, right? So that you can actually have an edge in the market. So I hope this is very much clear to you. So moving on to the next section, okay, it's the type of analysis. Okay, so what did we understand in the analysis part? That the basic criteria of making any decision in the financial markets is the analysis, is your own analysis. See, for a trader or an investor, his sole weapon behind his armory to take a decision on the basis of his her own analysis. So it is your own analysis that is your weapon, which will decide whether you should enter into such trade or whether you should enter into such investment or not. Are you getting my point? So the analysis is the single tool that you have, from which you can base your decision whether you want to go, whether you want to grab this opportunity or not. Can I say that your purpose right now as a learner is to increase the knowledge which can make your analysis more and more good or better analysis on an everyday basis? Yes, your whole focus should be on the knowledge, gaining that knowledge, which can provide you a certain edge in the market based on your analysis. Let's say me and you are a trader in the market, of so many traders who are available on this session. You all are traders and investors in the market. But one of us, okay, only few of us will be able to analyze some, movements, let's say either correctly. Okay, first of all, not everyone has a correct analysis. So first of all, what you need to do is to have a right analysis in your mind. Whether the price is going upside or downside, you should be very much clear. You should have some proper indications and proper, confluence, which we'll be learning in this sessions, how to get proper indications and how to have confidence that the price is going to go increase or decrease. Okay, so next step is to have a particular edge in the market. So let's say I am getting a news, I am analyzing that the price of the Bitcoin will increase. But after 1 month, you are able to analyze the same thing. So can I say that I analyzed it before you, before the movement can happen? And if I am taking that entry in that particular zone before everybody else is joining in the increasing market, will I not be much more profitable? Because my analysis is earlier, or my decision is a little bit earlier than a lot of other traders. Right. So I hope you're getting this point, that the two things that you have to make possible related to your analysis is, first, try to have the right analysis, right? You have gain more and more knowledge so that your analysis should be consisting of more and more indications and confluence. Do not forget about the confluence. We will be talking a lot of detail about the confluence in your analysis. But once the confluence happens, the most probability of the price will go is in a certain direction is always available. The second thing that you have to do in analysis is actually increase the timing, or basically have that knowledge or have that decision in the previous time. Okay, better than anyone else. Your timing in the market should be better than a lot of other traders. Okay, so there are two types of analysis that are available with us. Okay, for an investor or for a trader, there are two types of analysis that we can use in the markets. First is the fundamental analysis, and the second is the technical analysis. Only these two types of analysis will actually tell you where the market price is trying to go. So let it be equity, let it be derivatives, let it be future and options, let it be forex, or let it be cryptocurrency. First, you need to analyze the same security fundamentally and then technically. Most of the time, basically the major fundamental analysis, the thing that will be answered to you, which security you should actually invest in. So if you have heard that there are more than, I think more than 20,000 cryptocurrencies now available in the market, right? Can I say that every of that currency is very good to invest in? Can I say this statement that every of that currency is good to trade in or invest in? Out of so many currency options, out of so many cryptocurrency options, can I say that every currency is performing well and doing same, and I should be investing in every currency? No, there are some shit coins too, right? One of you said that. So understand, the fundamental analysis will answer you which currency you should trade or invest in. So let's say Bitcoin, let's say Ethereum. These are what? Why do you hear these names again and again? Because these are fundamentally strong securities. These are these securities have, or these cryptocurrencies have very strong fundamentals. Okay. Similarly, when we talk about the technical analysis, okay, when we talk about the technical analysis, the major question, the major answer, or the major question which is being answered by the technical analysis is when to buy the security. So let's say via fundamental analysis, you understand, or you have decided that, yes, I'm going to buy some FLM coins, or I'm going to buy some Ethereum coins, or buy BTC coins. But the major question is when. Right? Even if you're saying that from the January onwards, from the first half of the year onwards, the prices of the cryptocurrencies are decreasing on daily basis, right or no? Right. So my second question that is being answered by the same, technical analysis is that even if I decide that, yes, I want to invest in crypto, that yes, I want to invest in Bitcoin or Ethereum, when is the best time to invest, or when is the best time to buy or sell the security? So which is answered by the technical analysis. I hope that you are very much clear about these two types of analysis, because this is the thing which we are going to go on a continuous basis for on all these sessions. Am I clear to you, all of you, or is there any pending question you have in your mind which you're not able to understand till here? Please ask. So most of the people are saying clear, we can go ahead, but still if you have any questions left, just put it in the comment box. Okay, so fundamental analysis. Okay, we are not going to go through whole of the slide, but understand the proper concept of the fundamental analysis, right? So let's say you have decided to buy a new phone. Okay, everybody right now may, the common thing among all the people today on earth is that they have a phone. Okay, I'm not talking about the minority people, but the majority, the metro cities and other second tier cities, the majority, the major common thing that you will find is that everybody has a phone. Yes. Okay, so let's say you have decided to buy a new phone. So what is your process of selection? Okay, there are so many varieties available in the market, right? There are so many brands available in the market. There are so many technological differences in the market. If you're talking about touch phones, there are non-touch phones, there are QWERTY pads as well. Similarly, there are Android phones, there are Apple phones, there are Macintosh phones. So there are so many specifications available. There are so many brands available in the market. So what do you do? What is the process of selection while you actually decide when to buy a phone or not? Are you able to understand? Like when you are deciding when to buy, when you are buying a phone, there are so many questions that you answer to yourself. First of all, what is your budget? You cannot afford all the phones right now. Let's say your budget is $200 or 16,000 rupees. Can you buy an Apple? Can you buy Apple? No. Similarly, let's say you have smaller amount of money. Can you buy Bitcoin? No, it's because the price is huge. So what you will be, what you will be looking is all the phones or the types of the phones that comes under your budget. Second thing that you are trying to answer, whether like what is the battery life, what is the megapixels, the other fundamental factors that are affecting your decision, whether it is an Android, or whether it is a Mac phone, or it is an Apple iPhone, or whether it has sensors, whether it has touchpad. So many things that you are requiring and you're not requiring on a daily basis. So what are these things that you are studying right now before going on to buying a new phone is all the fundamental factors, because these factors are affecting your decision whether to buy a single phone or not. Am I clear to this? On this example, are you able to understand what is the meaning of the fundamental analysis? Right. Similarly, when we are going in the cryptocurrency market, when we are, when you visit the financial markets, even if there are equities, debentures, currencies, cryptos, anything, there are more than 10,000 popular securities that you can buy. But the fundamental analysis will give you a basic understanding of the structure of the business of the company, of the share you are going to buy. Or when we will be learning about the fundamental analysis of the crypto market, how do we fundamentally analyze? Let's say in equity market, you have proper financials, okay, of the company. You have the team of the company, who are the CEOs and the chairman of the company, what is the current ethics of the company, or how the company operates. You know a lot of things because that are available to you. But the fundamental analysis and crypto markets are still not clear to very much people, because they do not belong to what engineering background or the computer science background. You're not able to understand what is the protocol, what is the technology that is it is based on, right? So we will be going through all of these fundamental factors, like what to see particularly when you're buying the a coin. Let's say it's Bitcoin or it's Ethereum. We will be seeing what are the particular factors that you need to consider while taking a decision fundamentally. Okay. So this is all about the fundamental analysis. How do you do fundamental analysis? What are the, like you can say, the external factors that affect the price of the crypto? Okay, so what are the what is the fundamental analysis? You will all write in the comment box that these are the external factors that affect the price of the crypto. Okay, that's great. So now you understand that in the fundamental analysis, we will be studying about the external factors of the crypto. Even we will be talking about the government policies that are being, implemented nowadays, which are affecting the price of the crypto as well. Does everybody know that the Indian government has introduced a 30% tax rate on the crypto? Yes. So what do you think? What do you think that this news of the fundamental, this tax factor will help in increasing or decreasing the price of the crypto? What do you think by yourself? This news will either increase or decrease. So now you understand, majority of you people can understand what I'm trying to analyze with the fundamental factors, right? It is a bad news for investors. It is bad news for traders. And the second bad news is that we are not allowed to set off any losses, of that of the coins, and we have to pay a 30% income tax on every profit that we are making. We are not allowed to set off any other losses. So we'll be going in detail about the tax analysis as well. So we'll be thinking I'll have a separate session on how the tax is working in the Indian government. So we'll be having a next session. So right now we are focusing on the fundamental factors, and you are able to understand that yes, this news is not healthy for crypto market in the India, right? And you are expecting that the price might decrease in the future. So what you are going to do most? You are going to sell, or you are not going to buy, right? So am I clear to everyone? You understood what is the fundamental analysis? Let's move on. Next is the thing about the technical analysis. As I told you, what question will the technical analysis will answer you? It is the best time to buy that investment. So let's say after fundamental analysis, you understood, yes, that this is the crypto that you are going to buy, or you are going to trade in, or you are going to invest in. Second is, what is the timing? Okay, when you should buy, when you should sell. It is it is basically answered by the technical analysis. Technical analysis based on the assumption that all the information that can affect the price of the financial instruments, such as company fundamentals, economic factors, or the market sentiments, tweets, political events, economic events, are already reflected in the price. So understand, this is a very, very important assumption in the technical analysis, that if right now my Bitcoin is dealing at, let's say, $10,000, okay, which is 8 lakh rupees, the technical analyst always assume that all the fundamental factors that can affect the price is already embedded in the price that has come about. Right now the price is $10,000. That means that the price has already been had already included all the fundamental factors, and that is how the sellers and the buyers have matched the price of $10,000, that yes, they are trying to deal the market, they're trying to deal the crypto in the $10,000. So are you understanding this assumption, that all the fundamental factors are already included in the price? I do not have to understand any other fundamental factors. I just need to focus on what? I need to focus on forecasting the direction of price through the study of patterns. Okay, so patterns of what? In historical market data, the price and volume. So technical analysis is based on forecasting the direction of prices through the study of patterns in the historical market data. So it is a very another assumption in the technical analyst, that whatever happened in the market in the past will always repeat itself in the future. And that is why, because of those patterns in the market data, that is price and volume, we are able to understand that the right now, if I ask you right now whether the price is trying to go up or down, by the end of this internship, you will be telling me exactly where the price is going forward, if it is going downside or it is going upside. And if you know the direction of the price, your 70% winning ratio already has been achieved in the intraday trading. Right? So technicians, someone sometimes called the chartists, believe that the market activity will generate indicators in the price trend. So whenever the price trends are moving on, okay, we will be moving on to the charts, on the candlestick charts. How do we use them? We will see that the price trends indicate, generate some indicators which can be used to forecast the direction and the magnitude of the price movements. That means you can estimate in present that right now that the future price movement is going to go upside or downside. Even if it is going upside downside, how much will it go? Will it go above 100 points? Will it go to 100 points? Will it go to 50 points? So this is all the things that you will be answering yourself with the help of the technical analysis. So I hope that these two things are very much clear to you, the basic things that we have covered till yet, because now we are going to with the end of the day, and we have covered our today's agenda of understanding the basics. And so if you have any problem till here, please do ask me a question so that we can again answer and go through that topic, okay, in a very small thing, so that you can understand it properly, whatever we have studied. So please let me know if you have any questions. And please guys, save the number 9999494844. So can you explain the technical analysis in short? See, technical analysis is nothing but try to understand the nature of the price, right? So, let's say the price an hour before was 100 rupees of anything. Right now the price is at 90. Okay, what can I say about the price? Is the price increasing or decreasing? When the price was at 100 rupees, the price is now at 98 rupees. Can I say that it is a decreasing trend? Yes. So what can I expect in future? Can I expect with a major probability that the price will go upside, or with a major probability can I expect that the price will decrease itself? What is the major probability over here of the price decrease? Okay, so that is how you will use the technical analysis, in understanding the nature of the price with the help of price action, which we'll be discussing in the coming sessions, and you will be able to take some decisions based on that. So I hope that technical analysis and all the things that all the topics that we have covered till yet are now very much understood to you. I hope that this is an amazing session. Okay, you're welcome. Good night to everyone. And if you have any questions, you can still ask in the comment box. So let's call it a day. I hope that all of your questions are answered by now. Let's meet you in the next session. So good night, everyone. Have a nice day. Have a nice evening and enjoy yourself. We will meet day after tomorrow.